Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, July 8th, 2019. It's about 1 o'clock Eastern Time as I'm starting this video, and what I wanted to do is I'll start the video out with a brief update of the broad markets and then cover some short trade ideas. I've started working on compiling a list of trade ideas over the weekend, both long and short. So we'll start out here with the shorts, and then I'll follow up with another video soon with long trade ideas. Possibly get that out tomorrow. I also want to do an update on gold as well, and again that'll be covered in another video. Gold, U.S. dollar, in the mining stocks. So, all right, let's just dive into the charts here real quick. This is nothing new to update since this morning. I posted these 60-minute wedges. They were covered in yesterday's videos. This is what I'm watching right now in the indexes. You can see the divergences there. We had a divergent high at 0.1, little minor trend line, smaller wedge breakdown, and now we're working our way up within this larger wedge. So far we have a breakdown, back test, and a reversal there. So we got to watch that previous reaction low. Those are usually significant points, and there's also some minor resistance there. I think I included that this morning on the charts, the static charts that I posted. If you put a line right there around yesterday's or Friday's lows, you can see some reactions along here as well. So break below the Friday's lows will open the door for a move down here to 29.55. But right now it's really not very impulsive selling. But we did reverse off the back test of the wedge. So that in itself is a sell signal. But here's the thing: I mentioned this on a follow-up post today. We look at SPY, look at the 60-minute chart, and we don't have a breakdown there yet. So you want to put the odds in your favor, especially if taking counter trend trades. The very near-term trend is up. You want to see all the indexes break. You want to see SPY, QQQ, particularly the large cap, SPY, QQQ, and then the futures as well. So that's it. So we have the breakdowns in the futures. I just showed you ES. This is NQ, the NASDAQ 100 futures. They've moved down a little more impulsively. Nice, impulsive breakdown yesterday Friday below the trend line, near perfect back test, and so far moving lower, coming up on the first target / support level now. Getting there, not there yet. 77.60, 50-ish, we'll call it. 77.61 to be safe. And then I think I added some an additional line on the charts this morning. Again, those are on the front page of the site. And if you are a member, you should have received an email update every time a new front page post is published. If not, just drop me a line and I'll make sure to add you to that list. So there's some near-term levels, and as I mentioned this morning, Jerome Powell speaks Wednesday and Thursday this week, and right now the market is hyper-focused on rates. That's about the only thing driving the markets now. It seems that fundamentals have now been just pushed to the wayside, and it's all about what the Fed's going to do with the rates. So point being, we will almost certainly see some volatility starting on Wednesday and into Thursday, depending on what Powell says. So there it is on QQQ. You can see QQQ broke down impulsively too today. We gapped down below and kind of just holding right there. There's some levels on QQQ on the 60-minute chart. So that's the story on the indexes. We just need to see SPY break down as well, and to confirm some near-term sell signals in the market. Okay, now let's talk trade ideas. These are, at the time unofficial. I posted this one earlier today in the trading room. It was actually, of the ones I went through last night, one of my favorites. So I'm going to spend a little more time on this chart. We'll probably add this as an active official trade on the site. I just need to sharpen my pencil and identify some targets. But you can see everything marked here on this chart are significant levels. I may have an additional target somewhere in here around this level, but as of now, I'm targeting at least a swing down to these two levels here. And anytime you see horizontal lines on my chart, if it doesn't say T1 equals that level, because this is an unofficial trade, these are actual support levels. So when I do an official trade, I'll set my price target slightly above the actual support level to help prevent missing a fill if the buyers step in early. So that level is 32.63. I might kick that one up to about 32.70 and change. Let's say 32.72 or something like that might be my first target on that trade, maybe even a hair higher. But what I like about this one, and I'll have to scrub it for earnings here. Just it trades well to the technicals. You can see all the lines down below. You see divergent lows and divergent highs. Bullish divergent right here. That's a divergent low, rally. Divergent low, breakout, all the better when you can have a downtrend line there. There's a breakout. It's impulsive, which is everything you want to see on a breakout, and then a rally. That rally ended right here with, you got it, divergent high. So that wash, rinse, repeat kind of stuff. Divergent high right there. Divergent high one. We kind of limped down, broke down, but we hit support here. Put in a second almost equal divergent high there. Finally broke that support level, and after you broke support, there's the impulsive selling right there. And the moves on this one are pretty big. Even these little, we'll call them micro trends, the smaller trends off this divergent high, that's a drop of about 23, almost 24%. This drop here from the high down to the low, that was a drop of, just using the measuring tool, pops up to the left about 60%. And then the rally off the low there, which, you got it, ended with a divergent low. Simple stuff. Trend line break, and that was a 129% rally. So what's happened? Why do I like this one now? Well, a couple things. 38 is a pretty significant resistance level. It was that level here. Most importantly, when you go back in time, the more recent price action around a price level, in this case 38, is more significant than what happened back here. So this is really what I'm looking at. And again, we had it was resistance right here. The stock broke that resistance level, went up, back tested, back tested, back tested for weeks. Finally broke it here, and the fact that we had impulsive selling afterwards helps to validate that as an important level, meaning a lot of traders were watching it. It's significant. The fact we didn't just limp on through there and grind around through it. We broke down, and that triggered that 60-something% drop off the highs there. So we've now come full circle. We went back to it. We failed once. We failed twice. Probably if I zoom in a little closer, you see, yep, big bearish engulfing candlestick right there at the failure, and then so far we've moved lower following that bearish engulfing candlestick. So that's a lot of things right here that support a short trade on this one. Those are being first of all, a very extended overbought rally. Look at these persistent overbought readings. That red line is a 70 level on the RSI telling you overbought. So we were persistently overbought, a very extended price channel. And usually the larger the trend, the more oversold you get, the bigger the ensuing rally. The more overbought you get, usually the bigger the ensuing correction. So there's a lot of potential here. So far so good. We're starting to finally gain some traction to the downside today. So what else? Overbought, negative divergences, again, as we had at all these other previous highs right there. And not much else to add to that. There is, if the stock manages to reverse, there's some resistance there, right around 47.51. So if you're swinging for the fences on this one, meaning you're holding out for a drop of 35% or so, which I think this one could easily go to, then you could allow yourself for a stop up there. That's about 15. That's a little too much maybe at this point. Let's look at the weekly chart and see. Yeah, I like to use ideally, not always, but ideally a 3-to-1 risk-reward ratio, meaning I'll lose or risk $1 of loss for every $3 of profit that I'm targeting. That would be a 3-to-1 RR ratio. Depends on the trade, of course, but that's a general rule. Here's the weekly chart, and you can see a couple things here to help confirm the longer-term bearish case, the fact that the stock could drop easily 35% or more. We have a high level pending, hasn't yet occurred, but pending bearish PPO crossover. Last time we had one was right there. Then when high level, I'm talking when the PPO is well above this zero line down here. Here's another high level clean. I like clean crossovers. What does clean mean? Not this crap where you whip back and forth. This is sloppy. These aren't clean. This is whipsaw city right here. I like these clean separations in the line. You get the clean bearish PPO crossovers as I'm circling for you here. There's one there. That one doesn't look like much, but the drop from here to here, let me measure it for you. I have to take all those lines away. That was about a 25% drop, and you can see the other drops here. So the trends on this one, 50% drop. All these are just corrections in an ongoing bull market so far, but the tide may have already shifted on this one. There's a 60% drop. What do I mean by that? Well, again, we're looking at a long-term chart, 10-year weekly chart, and this one's been going up, making higher highs, but all of a sudden, since this point here in early 2017, the stock is making a series of lower highs and lower lows. which if it reverses here, that is the definition of a downtrend. An uptrend is defined as a stock making a series of higher highs and higher lows, and a downtrend is a series of lower highs and lower lows. So that's what we could be looking at here. Therefore, a lot more downside in this stock. And that's why I mentioned, again, talking about, if you want to give it some room and, you have to take a proper position size so you can afford a 15% loss. That would be the max loss, what I was talking about on the daily chart a minute ago. Okay, so I showed you the high-level bearish PPO crossovers. This one's still pending, not yet confirmed, but you can just see when the RSI gets up around this level, this high, and it starts to turn down, that's pretty much in every instance, as you can see, I'm going back in time, marked a significant top in the stock. So anything is possible. Sometimes the PPO lines can turn down and then turn back up, but that one looks pretty much like a done deal so far to me. The other thing, you add in these overbought readings. Let's just circle these here. Let me clear out this chart. And I know, again, I'm spending most time on this trade because it was my favorite, and there's just a lot in the charts to see here. 1, 2, I'm just roughly trying to circle these over. That's 70 right there, overbought readings. And again, remember, in a bull market, overbought's one thing and it just leads to corrections. You get overbought in a bear market, that's usually a much more powerful sell signal. So now let's follow this up. Again, I already told you that was about a 25% drop. Even this was probably a 5% drop or so. That was probably 30 or more right there. And again, you can just see down below, I'm just going up and circling each and every time the stock was overbought. There was one right there too. That was that first one, that drop. Again, try to put it in perspective here for you, 25% drop. So you get the point. These overbought readings, even in a bull market, are usually good for 25% plus drops. And should this be the early stages of a downtrend, as I just showed you a minute ago, you're probably then looking at 50% or more. So again, I know a lot of people out there, if you're new to trading investing, probably think I'm crazy calling for a potential 50% or more drop on a stock like this. But again, it's what the charts tell me. Right now, it's hard to say, but if the market in the sector, this is a drug manufacturer, specialty and generic, if that starts to roll over, then you can hold out for more. As of now, again, I gave you my minimum targets there. A tight stop, or a stop if you're just targeting those two, would be above the recent reaction high from last week. That is, you hit that candle, the bearish engulfing candle, the top of that being what was that high of 38.69, maybe just a hair above that. You want to keep it even tighter. You put your stop just above 38, and if you are comfortable with taking a small enough position size to try to hold out for that maybe 50% plus gain, then you can allow for that 15% stop loss up to about 40. This resistance level here, which is those previous reaction highs from 2018. Okay, so enough on MDCO. Official, unofficial. If I didn't like it, I wouldn't share it with you. So do what you want with that one. And now we'll just rifle through the rest very quickly. As I spent a lot of time on that one. But again, I just want to kind of point out a lot of different things. And many of these same trades, such as, look at the weekly chart. I'm not going to do it on each of these. Make sure, or ideally, the weekly chart should confirm a bearish or bullish case that you're looking at on a daily chart. If you have a lot of conflicting evidence, let's just say, for example, on FIVE here, 5 below, I'm looking at this trend line. A break of this trend line would likely trigger a trend reversal in the stock. There's a big old gap right here to be backfilled. I haven't added targets on this one yet, but I could tell you right here, probably minimum target down here at about 95.50 or so. But what you'd want to do, and I haven't done it yet, and that's why these are unofficial trades. I need to go through a little bit more. I've kind of highlighted the ones I'm going over as some of my favorites, but there it is. So here's a weekly chart, and yes, I hadn't done this yet until right now. It does confirm. I look at the chart, I see a powerful divergent high. I mean, clear and pretty strong negative divergences. I see a stock at a key uptrend line, primary uptrend line support, wedging higher on the weekly. So what happens there is if that daily chart, if that trend line breaks, which is the same one here, that triggers a more powerful longer term sell signal, and this could be a trend trade. Lines with my analysis on the broad market that we could come down here to all the way to about that 5450 area over time. It's not going to happen in a day or a week or probably even a month. Take months, maybe a year more, but that's about a 57% drop. And that is where, when I look at this chart, I think there's a good chance this stock heads up. Now, it hasn't triggered a sell signal yet. Probably the most important thing, and I always have to reiterate this because there's new people coming into the site, new people to trading, investing. A trade setup is not a trade. It's not an active trade. It is only actionable and active if and when you get a sell signal triggered. Why? Well, here's a stock in an uptrend. It's in a powerful uptrend, and it's pulled back to support. It has this 40-week moving average here, the red line. That's the same as a 200-day moving average, and it just recently hit that trend line. Maybe it bounces and works its way up. It is a trade setup as long as the charts, are constructive for a short. Maybe it wants to work its way up within the wedge and then break down. So again, it's a setup, but one that I like. It could trigger any day now, or it could trigger months from now. But the trigger will come on an impulsive break below the uptrend line. And again, here's some near-term targets, and I already gave you a long-term target. All right, the rest we will go through a little bit quicker. DRI, Darden Restaurants, there's a trend line right there. We had a minor trend line here. It broke, and we had a nice correction. It broke down. Here, let me highlight this for you. We had a divergent high, and this is you're going to see this as a common theme in a lot of these stocks, and it's the same as my analysis on the broad market. I know there's a lot of frustration out there, people that were short in the QQQ trade that got stopped out, but I've talked about this. The broad markets, when you look at my weekly and monthly charts, even the daily charts, you see a series of divergent highs, and each one has had a correction. They're tradable corrections, and as long as those divergences continue to persist, so in other words, we had a divergent high and a trend line break here. There was a sell signal in this stock. It broke down, back tested, and then dropped and hit this first target here. That's about 113.33. It's a pretty well-defined support level. From there, from the point of the back test right there, that was a drop of about 8%. So there was a trade to be made. And now what's happened, it's set up again. Sometimes when you have a breakdown divergent, the stock will play out to where I think it's going or where the technicals indicate, and that's it. And then you go on up, and the uptrend continues, and that's a time to get into the stock. In this one, I view this as what is it? We've had those series of earthquakes recently in California. I just mentioned the trading room when I was in Costa Rica. We had one that they said, locals told me is very rare. We had a 6-point something, a strong one. So with earthquakes, sometimes you get those, what do they call them? You get the aftershocks, but I think there's some, little minor earthquakes sometimes that come before the big ones. And this is kind of like what this is. You have a little correction here, about 9%, and you've now set up within the larger one there. So we still have, actually it hasn't yet made a divergent high. Ideally, it doesn't have to do it, but if it pops up, makes a marginal new high, then reverses, you want to see it break 123 right here, or 122.97, and that trend line. That would be a nice sell signal. And because it's even larger divergence, my minimum target would be again another move down to that 113.33, and quite possibly this 104.21, and maybe even more than that. So there's DRI, a trade setup, not an actionable trade. The first one that I covered today, Medco, MDCO, was actionable because that already broke down. The rest of these are setups. Okay, let's talk about the home builders. For those of you that have, were on the site, back in December and January, this was one of my favorite sectors. This was an official trade. In fact, these are very tradable. These were, I can't recall, I guess that was an official trade because we have targets here, T1 hit, potential targets, potential fourth target hit. The home builders trade very well to the technicals. You can see all these levels back here. Look at that beautiful wedge. And I talk about this very often. The more extended a run is, by extended I mean a very steep, sharp uptrend line, very well-defined uptrend line, ending with that divergent high. That's a powerful sell signal. From that point, the home builders fell 30. This is just an ETF too, by the way, 38%. And what did it end with? Well, we had a divergent low right here. That third target was hit, and you had a nice strong rally. And then back here, this is where I became very bullish at the late December, early January. Big divergent low. Look at that beautiful divergent low. Pointed out at the time, we had an official trade on this. I must have had those targets on another board. I think it was, maybe we used XHB. Oh no, that's it. T1, and then potential second target here hit. Now we've come full circle. The home builders, at least in ITB, I'll look at XHB in a second, you have this now divergent high, you have a trend line here, there's your negative divergence, just like you had a divergent high here, and just the bullish case, just like you had divergent lows right there. So we don't have a sell signal yet. Sell signal comes on a break of this uptrend line, and or maybe move that line a little bit lower than 37.36. I haven't adjusted these lines in a while. To be safe, I might want to pull that line down a bit, but I'm looking at intersecting support right here, and because of these divergences and how overbought we are, I'm looking for a significant correction, not just a 4, 5, 6% pullback. I'm looking for something double digits, at least down to this level, which was that former second target, about 35.20 right there, and quite possibly all the way back down here to that first target from that previous trade, about 32.70. And if you want, you can also use XHB. That's another home builder ETF. Just a little different makeup of the components, but you can see there. By the way, neither of these are pure plays. They're not all home building stocks. You have home improvement stores like Home Depot and Lowe's. In fact, they make up a pretty good chunk of this one. They're the top components, so you want to look at the charts of those to confirm. Okay, next up would be ULTA. Let's see. Not crazy about this one, but it's worth mentioning. It's a tradable stock as well. And what I see when I look at this chart is a series. It's working its way within this uptrend, but you have these series of smaller divergent highs that lead to tradable corrections. Another divergent high correction. Right now, another divergent high, I believe, correction to come, and probably bring us back down to this uptrend line right here. That uptrend line goes to the left of this chart. There's more reactions there. So this is where I think this stock is going, with the usual zigs and zags along the way, something like that. There's your divergent high, but as I mentioned earlier, all these smaller divergent highs really equal a series of consecutive divergent highs to make one larger divergent high, and that probably shows through on the weekly chart. When you start to see a large span of divergent highs like that, then you want to flip over to weekly chart, and these set the stages for the major trend changes. So that's what Ulta looks like there. There's your primary uptrend line, and that would be a much more powerful sell signal if and when that one breaks. All right, next up would be, let's look at SAFT, Safety Insurance Group, rising wedge, negative divergence. Again, simple watch, rinse, repeat stuff. No sell signal yet, but you had a big wedge here with a divergent high. You can see the divergence. There's your breakdown. There's your correction, three-wave correction ended in. You got it, divergent low, little wedge type pattern. There was your breakout right here. That was your buy signal after the divergent low, and you broke out of the downtrend line. And we've had a uptrend since. I'm making a mess of this chart, but I think you can see it there. There's the first wave up, and the momentum is starting to weaken as we wedge our way up within this rising wedge pattern. So you might get a sell signal before this wedge breaks. Maybe that comes in the form of some type of bearish candlestick reversal pattern. So again, it's a setup. This one's not in jeopardy of breaking out right now or breaking down, but again, when I figured I'd pass along. Sometimes these fall off my radar. There's so many stocks that I follow, I can't keep track of them all, so I throw them out to you guys. You can set price alerts, follow them, do what you want, and if you see anything interesting and I don't post an update, by all means bump me on that one, and I'll be glad to post an updated chart. ERI, this is a casino stock, and you can see this divergence forming here. Here's your divergence line right here. It should really be like that. Working its way down, but when I look at this, I'm seeing a lot of these casino stocks are setting up nice. Here's a weekly chart I just flipped over to. That first chart was a daily chart. Here's our uptrend line. This one's wedging up. There's been some tradable ops in here. We had a price channel right there which broke down, took us to the uptrend line, and we're wedging our way now here. So you can see the divergence there on the weekly chart. Last time we had divergent high on the weekly, we had a drop of about, if it's going to let me do it here, about 27% or so. And same thing in reverse. You get these divergent lows, you look for those, and that sets the stage for an uptrend or a rally. Let's look at a couple others while I'm in this sector. Some others. I'm going to look at the weekly chart. Not all the casino stocks, but I wanted to show you a few of them. Boyd Gaming, BYD, broke this uptrend line here, and a lot of these look to have look to be in early stages of a new bear market. By that I mean this is a downtrend, a series of so far lower highs and lower lows. Now this one needs to reverse and then take out that low to keep this downtrend intact. So this was an uptrend, bull market in that stock. So far, it's looking like the early making of a downtrend, not just in Boyd, but a lot of these casino stocks. This one hasn't broken down yet. Here's your uptrend line, MCRI, Monarch Casino and Resort. There's resistance up here, about $48, support around 40.62 or so. Also the uptrend line, and if it breaks that uptrend line, I think it comes all the way back up here. These casino stocks, they trend pretty big. There's big gains to be made on both the upside and the downside. About 46% there on that one if it plays out the way I think it does. PENN, there's another one. Primary uptrend line is not broken, but this one is clearly topped. This like many of the casino stocks, this one topped back here in 2018 and has already fallen from that point about 50%. So here's a stock that appears to be in a bear market. Maybe it's a correction within an ongoing bull market. If so, then it should hold this uptrend line support. If not, breaks that uptrend, this downtrend continues and the stock has more downside to go. MTN, did I cover? No, I didn't cover that one. Vail Resorts, just a nice, I like this one. You see this is a weekly chart again. Here's your uptrend line right there, pretty well defined. Broke down here and it didn't just limp on through there. What do I like about it? Well, we were flagging right there on the trend line, then we broke down with that huge red weekly candle. So you see the big red weekly candle here, that's your flagpole. And right in the middle there, you zoom in, you have the both bear flagging action. So flagpole, impulsive move down, set up the bear flag, break down from the bear flag, impulsive move, which also took out the trend line, came in and we've been back testing the trend line since. And what you want to see is this one roll over, probably give a minor trend line here, or take out these recent lows and start moving impulsively lower. That would be your cue that this one's headed a lot lower, that the bull market ended right here and a new bear market has begun in MTN. And then ERI, did I start with that one? Let's see. Yes, I did. And here's the weekly chart. So I believe I already covered that one for you. So there's ERI. All right, so that's casino stocks. I also have some other gaming stocks I might get to in a minute here if this video. Yeah, I only have a few more to go. We're okay. WWD, this is an aerospace and defense stock. This is a daily chart here. Uptrend line is not super well defined, but there's a lot of divergence building in this stock. Let me look at the weekly. I haven't even done that yet. Ooh, high level bearish PPO crossover, very overbought. At the very least, just like the stock market, the risk reward, in my opinion, is not attractive on the long side. It's more favorable on the short side. What am I doing right now? I'm circling the high level bearish PPO crossovers coupled with overbought readings, and you can see what's happened to the stock in the past. Every time that's happened, this is a 10-year weekly chart to try to put it in perspective for you. The drop off that high level bearish PPO crossover was about 38%. The next one was about from high to low about 34%, and I would expect absolutely nothing less this time around. At least a 20, this would be a target area, about 26-27% drop. You can see a confluence of support right here, so be targeting that level somewhere in there. Just I have to sharpen my pencil on it, but about a move down to $85, and that's WWD. Well, one of my favorites a while ago, and I'm still very much waiting to put this one back on a short. We got stopped out on a slight stop raid, and I still think it has a lot more downside. This daily chart is a little bit of a mess. This is Boeing. I'm going to get to the weekly chart, which is the case I made on this one before. So right now, this stock it's in this range. And Tesla did the same thing. I showed you a multi-year range in Tesla. When Tesla broke that range, as expected, it quickly fell to the bottom of the next support range. Very fast, and then kick back up. In fact, I need to revisit Tesla soon. So right now this kind of looks a little messy, but what stands out to me on Boeing is this weekly chart, and the same chart pattern I've shared back a couple months ago. You have this nice clean wedge type pattern, and you had a divergent high here at that point, and you had a 23% drop off the first divergent high. We pushed on up, made a second marginal new high, a lot like the stock market, and we fell again, probably, I haven't measured it out, maybe about the same so far. But we have what happened is, in a healthy uptrend, when a stock comes down and hits a primary uptrend line, that's it. One and done. It usually back off to the races. When the trend starts to weaken, how do you know that? Well, that's what these are for. These are momentum indicators. These are momentum indicators are the PPO, RSI. There's other ones out there. And when you get the negative divergence, it shows you the momentum is waning. So now we came back to that trend line again shortly after bouncing off it there, and we've been hugging it. I use the expressions like an exhausted sailor overboard, on a shipwreck, trying to cling to a lifeboat or a life vest, whatever. So far, it's holding that support, but if it breaks that level, that would be a pretty powerful sell signal. I'll have to work up some additional price targets on this one, but I've tweaked this trend line a little bit. The thing is, we need to break, and we need to see an impulsive break and or weekly close below. It's a weekly chart. So that's Boeing. And as far as price targets now, if I don't revisit it, this was a former target on that other trade. And I think after that, we hit this 268-ish level. So we still have a sell signal pending on this one, so I'll keep an eye on it. And that may be an official trade again. Let's see, LPLA. LPL Investment Holdings. Here's your divergent high right there. We had a divergent high and a decent correction. The stock fell about better than 10%, and it's pushing up. So this was our last divergent high when you had about a 10% drop. The stock's still in an uptrend. No sell signals yet. I'll be very clear on that. But what I'm looking at here, it continues to diverge, and it could turn around from here, go on and break that trend line. That would be a sell signal, or it may want to go up, make another marginal new high, and then break down. Either way, you want to see a breakdown below this trend line again, or any type of solid candlestick reversal pattern up there. And first target here, 76.70, followed by these additional targets on LPLA. All right, a few more. EVRI, Every Holdings. This is gambling stock. There's your negative divergence. Here's your trend line right here. We had a primary uptrend line there, which was broken, back tested. Right there, high level back test, and really what I'm looking at more so right now is this wedging type pattern, and that should take the stock down here. I should give you another target if you take this one. If I don't follow up on it sooner, we're gonna come in. There should be support here about 1090 down to about that 1057 level, then here, and then ultimately down here maybe to that 8. So let's just say this is a preferred swing target at this point in time, about 970 or so. Let's see, in that sector there was a couple more that stood out that was bullish actually. GDEN, Golden Entertainment, this one broke out, but it's not very impulsive so far, but you can see pretty powerful big divergent low. It's at a low, so if you want to hedge, you take a short on one gaming stock. You can take some longs on some of the ones that look more bullish. AGS, big divergent low there. IGT. Again, I'll cover long trade ideas in another video. I just want to point out that there are sometimes disparities within a sector. Sometimes some stocks, like in certain sectors, they tend to move together very tightly. And some other sectors, at times, I can look and find both bullish and bearish setups in there. And that's the case right now with these gambling stocks. All right, just a few more. We'll wrap it up. SORL, Sorrel Auto Parts. That's another sector I was bullish on quite a bit back here, and we had some longs that did very well. They were unofficial trades, I believe, maybe official on one or two of them. SORL has come to this downtrend line. So what's interesting about this one is we had a divergent high right here, and we broke this uptrend line right there. Stock has been moved lower, but it's coming in to push up against this pretty key level right here, 376. Why is that an important level? Well, it was very good support there. With support there, and then we finally gapped down below the support, and that's also significant. So there's the top of a gap. We failed right there on the pushback to this level. We tried to break it here, had a false breakout, and failed again. So that continues to show that 376 level is a very significant resistance level. So this one goes one of two ways. It either breaks out impulsively, and then that's bullish. If it can put that level in the rearview mirror, break out, and start to move up, it's also going to take out this downtrend line. So let me say this pretty simple. We have a stock at intersecting resistance levels, a well-defined primary downtrend line, as well as a very significant horizontal resistance level. It's trading 101. You can do one of two things with this. You can either short here with a stop somewhat above for a reversal off that level, a swing trade, even a trend trade, you hold on to it for a while, or you wait for a breakout above, you give it a little bit of room, maybe over 380 or so, look for an impulsive breakout and you position long. So that one can go either way. Based on where the market is, I'm favoring the downside break, but you respect it either way. It can go either way, and I'll give you an upside target. If this market has room to run in 2019, this stock could work its way all the way up there at about 570. VIPS, there's your uptrend line. You had a divergent high at this point. You can see the negative divergence down below. We broke down and we've been back testing, and right up to the 880 key resistance level. There it is again, another big gap right there. So here's one back testing at resistance, and if it happens to go a little bit above that level, pops above it and then reverses, you'll still have a divergent high there. So that's another potential short trade idea. VPIS could even be an objective entry here with a stop not too far above. PYPL, PayPal, you can see pushing up, divergent high, no sell signals yet, but pretty decent support or potential target here at 106.39, and then I think this one comes back in about 94.32 before all is said and done. MTCH is Match.com, or Match Group actually they call it. They own Match.com, I think Tinder, if I'm not mistaken, some other ones there. Breakdown back test right there. So this one's actionable at this point in time. And you also have some resistance here. It's been bouncing around this level about 74. So you can, there's a back test, but you can continue to back test. So it's not a hard sell. Plus you have the PPO turning up at the zero line here. So I'd like to see a little more evidence before shorting this one, but if we do have some confirmation, some type of solid sell signal on it, and I can tell you this too, if it starts to reverse off the back test and then breaks these recent lows right there, that would be a sell signal. First target, and I might have to sharpen my pencil on these other ones, maybe add another level around here. But you can see this one could work its way all the way back down to about the 35, 34, 36-ish level. All right, let's wrap it up here. I believe that's it. Let me just look over the list real quick. Yeah, that's it. Plus, this video is long enough as it is. Again, I could, I have other ones out there. I'm going to work up, try to whittle down the longs on my watch list as well, and get an update out to you guys on gold. Either later today or tomorrow, I'll do the update on gold and the long trade ideas. This has been Randy Finney with Right Side of the Chart. Hope you